Traders, I have 3 indicators and trading tips that could vastly improve your trading performance. They are easy to use, simple to understand, and effectively applicable to all markets and trading types. So watch this carefully because you will learn a lot. Let's go to the basics. First and foremost, I want to share you one of the most popular indicators out there, relative strength index, and one really good way how to use it in slightly unconventional manner. So now we are seeing GDP USD currency pair with its usual small term trends, which happens all of the time, and there is nothing even remotely interesting there. But if we add relative strength index, we might see something more interesting, because here we see that prices are steadily going higher. But what's interesting is that relative strength index is going lower. So you see from here to here it's lower, but actual prices are getting higher. So that means there is a divergence between development of actual prices and relative strength index. And this is unconventional way how you could actually have interesting trading perspectives with this type of pattern. Usually one sees that if relative strength index is too high, prices might be overextended and you could go short, or if they are really low and relative strength index is below 20, you could go long because the pattern is that it's oversold and trend might reverse. But here's the different aspect. It shows you that relative strength index is getting weaker while prices are getting stronger. That might indicate that trend is going to be weaker and weaker and prices will revert. So what you could see here is the same pattern. Markets are making new highs, relative strength are going lower. Now this is not necessarily a point where you have to straight up sell, but you could see the prices are lower. And in this case you have to follow the market and wait for indication when prices are breaking lower, because as you see, prices hit new height, but it failed to do any continuous movement and they slowly broke down. So question is, if we are seeing this type of pattern, how to enter this market? And here is our next indicator, because we have to have precise prices and patterns where we could enter the market. And then goes the second aspect, and that is precise entry. And precise entry could be shown with Japanese candlesticks, because out of context Japanese candlesticks means nothing. You could see green or red dots and they are just showing you some random pictures which doesn't say anything. However, if there is strong uptrend or downtrend, Japanese candlesticks in strong trends might indicate places where trend has ended, as you could see here. If we zoom it here, we could see here was the strong trend. Prices were green all of the way, and then you see this pattern. We saw that prices started to go higher but failed to do that and actually get slightly lower. And this coincided with the place where relative strength index also was getting weaker despite the fact that prices got higher. So this eclipse star was clear indicator that prices might have been reverting. So here, yes, in the next phase, price actually started to fall, and this could be good indication for you to go short, because market went all the way below and it was a good, relatively safe short-term money-making opportunity. So one indicator was that prices are getting higher but relative strength index is getting lower. So that means that trend might have ended its strength, but we needed to have some confirmation for that. And for that, Japanese candlesticks came into place, because it showed that pattern, which was eclipse star. I think that was the correct name, but you got an idea. It showed that prices are getting weaker and there is no strength here, and it fell in the next move. So good indication that prices might fall, which was continued by the following step. But then we could have even better idea how to confirm this movement, because now we will see how moving averages show their true strength, and this is with the indication of trend movement. So now we have 20 moving average, which is slightly longer time frame, and we have 5. This has like 5-second moving average in this example, which is really short-term moving indicator. And these sort of short moving average indicators could be used as a determination where trends have started. For instance, where short-term moving average crosses below longer-term moving average, you see prices are getting higher. Or when short-term moving average goes below long-term moving average, we see prices are getting lower. So this is indication where downtrend might occur. So it was also similar here. We could see that once prices went below moving average, yes, there was one slight hiccup, but still prices went below moving average and they continued their downtrend. So we could add third indicator which confirmed that actual trend pattern. So what we had here, we could see that trend has ended it because prices were just slightly higher, but relative strength indicator was lower. Then it was confirmed by eclipsed pattern from Japanese candlesticks. So we could see that we could go short. But then prices actually started to go lower, and it was clear indication that we could go short. So at this level we could go short because prices closed below moving average, and we went and made money all the way here right up until trend reversed again. So this is the way how you could use three indicators to stack them together and have good trading strategy. One without any context might be too dangerous because, well, if we see that relative strength index diverges from actual prices, well, it's kind of difficult to find precise entry point. Yes, one might say that trends are getting weaker, but we have to have good entry price, and something like Japanese Candlestick showed this in very good example, and it was also confirmed by moving average in couple of trades later. So we have weaker trend indicator that trend has ended from Japanese Candlestick, and once prices started to move in the reverse direction, we have confirmation from moving average crossovers. So then we could actually have setups for opening our trade, and this is quite effective approach how to trade. And actually, if you want to see more information in that manner, be sure you are following my Telegram channel, because there you could see much more comprehensive analysis of moving averages, other trading indicators, and various types of trading strategies in different markets. You will see with short-term trades, long-term trades, various types of combinations between indicators and risk management tools, and how you could stack it all together with your trading strategy. And of course, you could join it for free, and you can use my link below this video to join it. So take your time, explore this video thoroughly, and join my Telegram channel. So in conclusion, this was simple yet effective setup how you could actually enter your trades. Look for divergences between price and relative strength index. In other words, once prices are moving higher and relative strength index is not moving higher, trend might be weaker. Or in other terms, prices are getting lower but relative strength index hasn't changed, downtrend might have ended it as well. But for that you need to have confirmation in Japanese candlesticks. So if you are seeing patterns like this where strong price action have ended it and prices are actually slightly reversing, like in example here I'm just showing you now, or here for instance, you see that prices are getting lower, it was sharply lower move, but here move eclipsed and actually went slightly higher, and then actually next trade was up trade and trends might have reversed it. And then you could see with moving averages for clear confirmation of prices, because when price movement is strong and trends are strong, you could see that moving averages will do very good for your trade entries. For instance, here prices opened when shorter term moving average closed below longer term moving average, you could go easily short and make money. And for all of the uptrends as well, even in the bad examples like here, you could still be at least break even because this trade closed here, so you didn't lose much money. Or with longer trends, prices also closed above moving average and short term moving average was above long term moving average, and you had clear price entry. So this is the third approach how you could actually confirm your trades, and this is how you traded it. You see patterns, you test patterns, you add a couple of indicators to verify if your trading setup is correct, and then you start to trade and make money. So thanks for watching this video, and let's continue to make money together. Bye.